In this video, I'm going to talk about the best piece of trading advice I wish I'd known before I started. Stay tuned. Hey traders, a very warm welcome to you. How are you doing? I hope your trading is going well. Okay, best piece of trading advice. Actually, I'm going to give you probably 5 in this video because there are so many, really. But let's just drill it down into the very, very best ones. Number 1. The first bit of trading advice I wish that someone had told me is forget about the money. Start small. Now, this is I probably was told this, right? I probably was. Someone sensible probably said to me, listen, take it very steady, take it very small. Prove that you can trade first before starting to put in decent money. I didn't take it to heart. This is the kind of thing that you really need to take to heart. You need to say, listen, I want to do this as a long-term thing. I'm not looking to buy one stock and sell it and that's me done. If you're into trading, if you want to make money at this for the long term, even throughout the rest of your life, maybe not being so active, but having the skills to analyze a trade, take a trade when the opportunity comes, you need to start off small. This is 2 reasons. Number 1 is reducing the pressure of the money. If you're starting with a big account relative to your net worth, all those kind of things, you are going to feel the pressure when a trade is going your way. You'll think, oh, that's a lot of money, I'll take it. You'll want to take the profits quickly. Vice versa, you're going to feel the pressure when it goes against you. Oh, I don't want to lose that, don't want to lose that. You need to be refining your craft and your skill rather than looking at it from a profit perspective. So starting small is just the biggest possible thing. And you know, when the question comes up as when should I start ramping it up, you'll know when you've made the good progression, you've got the consistency, the losses are coming as well, but you're capping them off early, you're letting those runners win, you're picking the right trades to be in, you're not over trading, all those hundreds of things that we could go into, which we won't do now, but you'll know when it's time to ramp it up and then start to make some money. So starting small and looking at it from a perspective of, hey, I'm doing a skill, I'm actually improving a skill here, not looking to make money. Okay, the next one I would have is very similar, but it's not quite the same. It's to focus on risk. Forgetting about the size of the account, just focusing on the per trade or per group of trades. This is the biggest thing, bar none. Maybe psychology is in there, but if we're looking from a pure perspective, an operations perspective, risk management, it's massive. We've said this before, guys. If you've watched my videos before, you'll notice I've said this plenty of times. You can have the best system in the world. If your risk management sucks, you're going to blow up. It's just as simple as that, because unless you've got a 100% system, which is you don't have, you could blow up on one losing trade if you don't manage the risk. So focusing on the risk and understanding, hey, what's the worst case scenario? And for me specifically, it was accepting that risk. Say, hey, okay, this is the position size I'm doing. This is my max loss per trade. I'm taking X trades per week, X trades per month, X trades per year. Worst case scenario, I will lose all of them. That's my worst case. Am I happy comfortable with that? Yes, I am. Let's begin the year. So similar to starting small, but really focusing on risk, and also purely from a perspective of where's the genuine risk in the trade. A lot of people were caught out on the Swiss recently, not so recently, but go and look on the charts. You know, where's the hidden risk in it? Are you holding a stock overnight that you shouldn't really be holding overnight? You know, are you in something that there could be some news coming out, or just understanding the risk, because that keeps you in the game. If you have the capital to play the game and the time, you can do this. You can just keep going and going and going and going and going until you improve. You just need the capital and time. And if any of those run out, and normally people run out of capital, hence they run out of time, not many people keep going and going and going and say, well, I'll just keep small amount of capital and I can keep going indefinitely until I get this. So focusing on risk, number 3. Number 3 is filter out the noise. A couple of things for that. This is a big one as well, guys, is that there's so much information, so much, bombarded with stuff from TV, magazines, newspapers, newsletters, emails, gurus, YouTube videos, all the stuff. Just get rid of it. If you want to follow somebody, follow somebody. If you want to kind of subscribe to something that gives you, information or trade ideas, I don't think that's a problem, but just stick it to one. Just keep it as a one thing that you follow. If you don't want to do none, even better. But if you feel like you want to have one that you want to watch or you want to read or whatever, that's fine. But when you have so much noise, you do yourself a disservice, because you get, you know, pros and cons for different trades coming at you, and ultimately the result is a neutral, but you've got all this noise to filter through. So filter out the noise. So from that perspective, and also I'm going to put this as number 4, very, very similar, is to stick to one method or one strategy or one style. This is a mistake I definitely made, is trying to kind of be a master of all trades, or jack of all trades, master of none, should I say, but sticking to one thing. And that could be as well, you know, market or markets or group of markets, not too many, but kind of saying, okay, listen, I'm going to be a day trader scalper of, you know, DAX, Dow, that's it. Sticking to that, running it for a while, seeing how you do, analyze your performance. Or I'm going to trade tech stocks on a swing trade basis after earnings, or I'm going to trade insurance stocks, London Stock Exchange insurance stocks, pair trading, whatever it may be, it doesn't matter. The point is sticking to one method and just sticking it out for a long period of time. Definitely a big one, that massive mistake that I see people make in trading. So what have we got so far? We've got start small, really, really important just to go in. Even if you've got the funds to stick in a lot of money, don't start small. Think of it as a skill. Number 2, focus on risk, making sure you understand this is the biggest part of the game, guys. Trade risk, weak risk, multiple trade risk, hidden trade risk as well. Just everything is about risk. We are risk managers, number 1. You know, the most important thing is we're not losing our capital. And next thing we want to do is to grow our capital, grow our trading account. 3, filter out the noise, get rid of all the crap that's coming in and bombarding you, social media, YouTube, newsletters, all that stuff. Much more clarity. You can go in with more focus and make your own decision, and then just stick to it, rightly or wrongly. That's the point in trading. You're backing up the decision with money, and rightly or wrongly, you're going to be proved, and then it comes down to the risk of how much you lose if you're wrong. Number 4, sticking to one method or group of markets or one market. So if you want to be an FX trader, cool, be an FX trader, focus on your 5 pairs that you feel that you want to focus on, stick to that. Time frame wise, if you want to be a day trader in FX, do that. If you want to be a swing trader in FX, in stocks, whatever, do that. But sticking to one method, one strategy. And the final thing I'm going to put here, guys, number 5 is, you know, be in the game, in it for long term, or should I say, expect to be in the game for the long term. Getting rich quick doesn't exist. If it does, it's luck. Very few people come into the game and instantly can pick it up straight away. Yes, there are going to be the odd 1 or 2, as there are always outliers in the normal distribution curve, but expect to be in it for the long term. And if you can think that in the back of your mind, that will help put all these into perspective, because you say, okay, well, I'm expecting to be in this trading game for the long term, so it makes sense to start small. I want to be here 5 years down the road, so I will start small. I need to focus on my risk, because again, I want to be here 5 years down the road. There's no point in me overdoing the risk. I want to have my own method, my own strategy. I don't want to be relying on other people and doing all that kind of thing. So yes, I'm going to filter out the noise, or I'm just going to have one newsletter or one kind of asset that I look at to learn from. Sticking to one method, again, I need to master one or discard it and realize it's not for me before I move on to the next. A very methodical approach. So that really, if you have that in your mind and say, hey, listen, I want to be here in the next 5 years, 10 years, or I'm still going to be in the markets, all these fall into place. And if you put all these into perspective and manage all these, you know, and think about them as you're trading, you know, I think I was probably told these things when I started trading, but I wish that I'd taken them more to heart to shorten that learning curve. And I definitely think that if you take these to heart and you sort of run by these, then the learning curve will potentially go from many, many years and shorten it right down. Anyway, guys, let me know what your best piece of trading advice you wish you'd known before you started trading in the comments below. I'm sure there's loads. It'd be interesting to see if there's one kind of theme there. If you like the video, give it a thumbs up. Don't forget to subscribe to the channel if you haven't already for more videos from myself and other traders on here. Good trading. See you in the next one. Take care. Bye-bye.